What are seller concessions and what is a rate buy down? What's going on, guys? Mari with the Escobedo team here, your local mortgage experts, and I just wanted to explain these two very important topics, which are basically the hot topics of the real estate market as stands right now, with interest rates where they're currently trending. Okay, so for the last 6 to 12 months, we've been dealing with a lot of rate buy down, whether that means permanent or temporary rate buy down, and seller concessions that are being negotiated from the seller for the buyer when buying a home. So why these are two super duper important pieces for the home buyer is because this is how we make sure the buyer is able to purchase as affordably as possible with the best rate possible and the most comfortable mortgage payment. So your seller concessions are what are negotiated at the purchase agreement time when you're submitting your offer. So how much is the seller going to pay towards your closing costs, whether that's for regular closing costs or your rate buy down? Now, what is a rate buy down? A rate buy down is an amount of money that the lender charges for the current interest rate that you're moving forward with. So that is either a percentage based on the loan amount or a specific dollar amount that they're charging. Now, most buy downs are permanent rate buy downs, meaning that rate will be fixed over the next 30 years that you're buying down. And or we also have the ability to do what's called a temporary rate buy down, where a lot of people have heard of the 3-2-1 or 2-1 buy down, where in the first year your payment is reduced by 2 percentage points, in the second year by 1, and then it reverses back to that original note date. How do we get these? With seller concessions. What do you want to make sure that you do when you submit your offer? Negotiate seller closing costs and concessions to make sure that you can take advantage of these rate buy downs. Mari with the Escobedo team, guys. Let our family help yours.